Somewhere buried in the fine print of your loan agreement is a sentence that could cost you thousands of dollars. And the bank is absolutely counting on you never reading it. Welcome to the world of hidden fees, prepayment traps, and the kind of financial fine print that would make a lawyer sweat. You sign on the dotted line, maybe feeling pretty good about that interest rate, but the rate is just the headline act. The real show is everything underneath it. Think of your loan agreement like an iceberg. The terms you negotiated are the tip, and the fees are the 9/10 slowly sinking your financial ship below the surface. The origination fee alone can run anywhere from 1% to 3% of your total loan amount, meaning on a $300,000 mortgage, you could be handing over up to $9,000 before you've made a single payment. And that fee often gets quietly rolled into your loan balance. So you're not just paying it, you're paying interest on it too, for decades. Then there's the prepayment penalty, which is perhaps the cruelest irony in modern lending. You get financially punished for being responsible. Some lenders will charge you up to 6 months of interest just for paying your loan off early, which is essentially a fine for being good with money. The yield spread premium is one that most borrowers have never even heard of, and that's entirely by design. It's a payment a lender makes to a broker for steering you into a higher interest rate loan than you actually qualified for. And it's been dressed up in enough legal language that it might as well be written in ancient Sumerian. Private mortgage insurance, or PMI, is another one that sneaks in wearing a helpful disguise. Lenders frame it as protection for you, but it exclusively protects them if you default. You can pay PMI for years on a home that has appreciated significantly without ever being proactively told that you've crossed the equity threshold to remove it. Escrow account cushions are quietly padded, so lenders can hold extra reserves of your money, sometimes 2 to 3 months of taxes and insurance, collecting float on your cash while you wonder why your monthly payment keeps creeping upward. Forced place insurance is even more aggressive. If your homeowner's policy lapses for even a day, lenders can unilaterally slap a replacement policy on your home that costs 3 to 5 times the market rate, billed directly to your loan. Historically, every lending boom has been followed by a wave of borrowers learning these lessons the hard way after the 2008 housing collapse. Millions of homeowners discovered their adjustable rate loans had reset clauses buried in paragraph 47 of documents they were handed at closing and told to sign quickly. The pattern hasn't changed. The packaging has just gotten sleeker. The misconception most people carry is that the government protects them entirely from these practices. And while regulations like the Truth in Lending Act require disclosure, disclosure and legibility are two very different things. A fee can be disclosed in a 12-page document in 8-point font and still be legally considered transparent. So what do you actually do with this information? Before you sign anything, you request the loan estimate and closing disclosure side by side, and you compare every single line item because lenders are legally required to give you both, and discrepancies between them are your first red flag. You specifically ask your lender in writing, does this loan have a prepayment penalty? And if so, what is the exact formula and timeline? You also run the APR against the stated interest rate. If the annual percentage rate is significantly higher than the interest rate, that gap is basically a neon sign pointing at your hidden fees. Hiring a real estate attorney to review your closing documents for a few $100s is one of the highest return investments you will ever make. Discipline here means slowing down when everyone around you is rushing, because the closing table is designed for speed and momentum, not careful reading. The borrowers who fare best aren't necessarily the ones with the best credit. They're the ones who treat every loan document like a negotiation, not a formality. There's something almost philosophical about the fact that the most expensive mistakes in personal finance aren't made in volatile markets or economic crises. They're made at a quiet table with a pen in your hand and a stack of papers you were too polite to question. Protecting yourself isn't paranoia, it's just reading the room. And in this case, reading every single page of it. The system isn't going to change on your behalf, but your approach to it absolutely can. And that shift in posture from passive signer to active negotiator is worth more than any interest rate you could shop for. And if you're ready to take those next steps, whether it's real estate investing, home contracting, work, or finding the right lenders, check out our links in the description below.